Thousands of small and medium-sized businesses across Canada hand over anywhere from $3,000 to $8,000 to their external accountant, just for corporate tax filing alone. And what if I told you that you could do it yourself, in under 10 minutes, using software that understands Canadian tax law better than most junior accountants? Stick around, because over the next few minutes, I am going to show you exactly how. Welcome to the Forge Tech channel. My name is Thierry, and today we are diving deep into a topic that keeps just about every Canadian business owner up at night: corporate tax filing. Whether you are incorporated or self-employed, whether you have 2 employees or 50, this video is built for you. We are going to break down the T2 federal return, the CO-17 for Quebec, GST and QST remittances, the T1 and TP1 for self-employed individuals, and most importantly, how Forge Tech Accounting automates every single piece of it so you can focus on what actually matters: growing your business. Forge Tech Accounting is a cloud-based accounting platform developed right here in Montreal, by Canadians, for Canadian and Quebec businesses. We built this platform because we understood from day one that Canadian tax law is not the same as American or European tax law. The forms are different, the rates are different, the credits are different, and the interplay between federal and provincial obligations adds a layer of complexity that most generic accounting software simply cannot handle. That is exactly what our system was designed to master. Why does this matter right now? Because deadlines are approaching fast. If your fiscal year ends on December 31st, your T2 return is due by June 30th. But here is the part that trips up so many business owners: your actual tax balance owing is due much sooner, by the last day of February, just 2 months after your year end. Miss those dates, and it gets expensive quickly. I will break down exactly how expensive in just a moment. Before we continue, if you are an entrepreneur, a freelancer, or anyone who wants to understand Canadian business taxation, hit that subscribe button and turn on notifications. We publish practical, actionable content every week that will save you real time and real money. It is free, and it takes 2 seconds. Now, let us talk about what the real world looks like. When you run a small or medium-sized business in Canada with 5 to 50 employees, accounting is not just a necessary evil. It is a year-round process that demands constant attention. The annual cycle looks something like this: you do your day-to-day bookkeeping, recording invoices, expenses, and payroll. Then, at the end of your fiscal year, you close the books, make adjusting entries, calculate depreciation, and set up provisions. After that comes the review or compilation by your accountant. And finally, the actual filing of your corporate tax returns at both the federal and provincial levels. But the real cost is not just your accountant's invoice. It is all the time you personally spend preparing documents. How many hours do you spend digging up receipts, compiling bank statements, answering your accountant's emails, going back and forth on missing documents? We are talking easily 20 to 40 hours of work per year, just on preparation. And every round trip with your accountant, every correction, every missing document, that extends the process by days, sometimes weeks. And then there are the risks. They are real, and they are frequently underestimated. Expense categorization errors happen all the time, even with experienced accountants. You put a business meal under office supplies, you classify an equipment purchase as a repair instead of capitalizing it, and suddenly your depreciation is wrong, your deductions are overstated or understated, and if the CRA decides to audit you, you have a problem. Not to mention the tax credits you miss out on because nobody told you that you qualified. Let me give you a concrete example. Julie owns a hair salon in Laval with 8 employees. Every year, she pays $4,500 to her accountant just for corporate tax filing. On top of that, she spends about 30 hours preparing her documents. Last year, her accountant forgot to claim the employee training tax credit, which cost her $1,200 in lost savings. And when she had a question about her quarterly installments in October, her accountant was swamped and did not respond for 3 weeks. Julie is not an isolated case. This is the reality for thousands of business owners across Canada. The stress of tax season is amplified by the complexity of the deadline structure. For the federal T2, you have 6 months after the end of your fiscal year to file your return. But the tax balance owing is due 2 to 3 months after your year end, depending on whether you are a Canadian-controlled private corporation or not. On top of that, if you have quarterly installment obligations, those cannot be missed either. It is a fiscal calendar that demands discipline, and a single missed date can trigger penalties. So let us get into the specifics. What exactly is the T2? The T2 is the corporate income tax return at the federal level. Every corporation incorporated in Canada must file one, even if it made zero profit during the year. If you are incorporated, you have no choice. You must submit your T2, period. The structure of the T2 form follows a fairly clear logic. First, you declare your gross income, everything your business generated in revenue, whether that is product sales, services rendered, investment income, or capital gains. Then you subtract your eligible deductions, cost of goods sold, salaries, rent, insurance, office expenses, interest on loans, and so on. That gives you your taxable income, and that is the number on which your tax is calculated. Understanding the federal tax rates is essential. The general corporate tax rate is 15%. But if you are a Canadian-controlled private corporation, a CCPC, and your taxable income is $500,000 or less, you qualify for the small business deduction, which brings your effective rate down to 9%. That is a massive saving. On taxable income of $200,000, that represents a $12,000 difference. This is why it is absolutely critical that your return correctly identifies your CCPC status. Let us talk about the key schedules. Schedule 1 is the reconciliation between your net accounting income and your net taxable income. Because your accounting income and your taxable income are not necessarily the same thing. There are expenses that are deductible in accounting but not in tax, and vice versa. Schedule 8 handles the capital cost allowance, the CCA, which is where you calculate the tax depreciation of your capital assets. And Schedule 125 is your detailed income statement using Jiffy codes, the general index of financial information codes that the CRA uses to classify your revenue and expenses. Now let us walk through the deadlines in detail. If your fiscal year ends on December 31st, your T2 return is due no later than June 30th. That gives you 6 months. However, your tax balance is due by the last day of February, only 2 months after your year end. This is a classic trap that I see year after year. Many entrepreneurs think they have 6 months to sort everything out, when in reality, the payment needs to be made well before the actual return is filed. And that is often where the nasty surprises hit. What happens if you pay late? The penalties are severe. We are talking about 5% of the unpaid balance, plus 1% for each additional month of delay, up to a maximum of 12 months. That means if you owe $20,000 in tax and you pay a full year late, you are looking at $3,400 in penalties alone, on top of daily compounding interest. That is up to 17% in total penalties. Trust me, that is not the kind of mistake you want to make. Now let us move on to the CO-17, Quebec's provincial corporate tax form. The CO-17 operates in a similar fashion to the T2, but with Quebec-specific particularities. The general provincial tax rate is 11.5%. But with Quebec's small business deduction, the effective rate can drop to 3.2% on the first $500,000 of taxable income. It is critical to calculate this deduction properly, because it is not automatic and it has its own eligibility criteria. The CO-17 has its own set of schedules. Schedule A details your income, Schedule B covers your Quebec-specific deductions. And what makes Quebec particularly interesting from a tax perspective is the range of provincial tax credits available. The Research and Development Credit, the Workforce Training Credit, credits for businesses located in designated economic zones. These credits can represent thousands of dollars in savings, and a surprising number of businesses miss them entirely because they simply do not know they exist. One crucial point, the concordance between your federal T2 and your provincial CO-17. The base numbers must match. Your net income, your common deductions, these must be consistent across both returns. If there are unexplained discrepancies, it can trigger questions from Revenue Quebec, and that means more time and more stress that nobody wants. And this is precisely where Forge Tech Accounting changes the game. The principle is simple but powerful. If your bookkeeping lives in Forge Tech all year long, your taxes practically file themselves. Let me walk you through exactly how it works, step by step. First, you open the tax module from the main menu. It is clearly labeled, you cannot miss it. Second, you select the fiscal year you want to process. The system immediately shows you a summary of your accounting status for that year. Third, and this is where the real magic happens, the system automatically analyzes every single transaction from the entire year. Every invoice, every expense, every journal entry. The artificial intelligence tax agent reviews each amount, validates its categorization, and ensures everything complies with both federal and Quebec tax rules. Fourth, the system runs a complete consistency check. Does your balance sheet balance? Do your declared revenues match your issued invoices? Are your deductions reasonable compared to your industry benchmarks? If there is even the slightest inconsistency, the system flags it before you go any further. Fifth, Forge Tech automatically generates your T2 and CO-17 forms, along with every required schedule. Schedule 1, Schedule 8 for CCA, Schedule 125, the provincial annexes, everything is there. You can preview each form, verify the numbers, and if everything looks correct, export the whole package as a PDF, ready for electronic filing through e-file or for printing. What the artificial intelligence specifically checks is what makes the real difference. It identifies eligible deductions you might have overlooked. It spots tax credits you qualify for but have not claimed. It detects inconsistencies in your numbers that could draw attention from the CRA. Essentially, it does the verification work that an experienced accountant would do, but in minutes instead of hours. Now let us talk about GST and QST remittances, another major headache for many business owners. The GST is the federal goods and services tax at 5%. The QST is Quebec's sales tax at 9.975%. If you are registered for these taxes, you must collect them on your sales and remit them to the government, minus the taxes you paid on your business purchases. The GST 34 form for GST and the FPC 500 for QST must be filed at a frequency determined by your annual revenue. Under 1.5 million, you can file annually. Between 1.5 and 6 million, it is quarterly. Above 6 million, it is monthly. In Forge Tech, everything is already pre-populated. All your sales with collected taxes and all your purchases with taxes paid are in the system. The calculation of input tax credits, the ITCs at the federal level and ITRs at the provincial level, is done automatically. You review the amounts, approve the filing, and submit directly. It is that simple. No more pulling out calculators or juggling between paper forms. If you are self-employed, meaning you are not incorporated, Forge Tech handles your situation too. Instead of the T2, you file a T1 at the federal level and a TP1 at the provincial level, along with the T2125 form for your business income. The system automatically calculates all your eligible deductible expenses, your home office based on the proportional area used for business, your vehicle expenses based on business kilometers driven, your supplies, telecommunications costs, and professional subscriptions. Everything is accounted for and calculated according to CRA rules. Now, let us do the math, because this is what is really going to convince you. On one side, you have the external accountant. For corporate tax filing alone, we are talking about $3,000 to $8,000 per year, depending on the complexity of your file. That does not include monthly bookkeeping, payroll, or tax remittances. All in, a typical small or medium business can easily spend $12,000 to $20,000 per year on accounting services. On the other side, you have Forge Tech Accounting at $149 per month. That works out to $1,788 per year. And that includes absolutely everything: full accounting, tax filing, payroll management, invoicing, and 8 artificial intelligence agents working for you around the clock. The minimum savings is $1,200 per year. But in most cases, we are talking about $3,000 to $6,000 in annual savings. And in terms of time, instead of waiting 3 weeks for your accountant to get back to you with your completed return, you produce it yourself in 10 minutes. Let me recap what we covered today. The Federal T2 and the Quebec CO-17 do not need to be sources of dread. GST and QST remittances can be managed in a few clicks. And whether you are incorporated or self-employed, Forge Tech Accounting has a solution tailored to your reality. If you want to try it for yourself, we offer a free 14-day trial, no credit card required. Just go to forge-tech.ca, create your account, and you can start exploring every feature immediately. You have absolutely nothing to lose. If this video was helpful, give us a thumbs up, subscribe to the channel, and leave us a comment telling us what topic you would like us to cover in our next video. We read every single comment, and your suggestions often inspire our next piece of content. Thank you for watching, and I will see you in the next video where we will be covering payroll management with Forge Tech's 8 artificial intelligence agents. It is going to be just as practical. Until then, have a great tax season, and whatever you do, do not let those deadlines sneak up on you.